let's talk about the global knock-on effects you teased us with in the beginning here, so
Yes.
we can really project out what this doomsday scenario could look.
Well, let's focus for a moment on Hong Kong. If, as I've read, a whole lot of dollar loans went into the Hong Kong banking sector, and then are transformed into renminbi and used to develop firms in China, and we have a global recession, and the dollar continues with higher interest rates to strengthen, do we see what you might call an outbreak of the default of Hong Kong banks? Was the Hong Kong financial sector, and I'm using Hong Kong as one analogy. There are things going on in Latin America, there are things going on in Eastern Europe, and et cetera. But if that were to happen in Hong Kong, would the Hong Kong banking sector be wiped out? Would the financial center of China that's renminbi-based migrate to Shanghai, and it further, which you might call distance, Chinese finance from Western finance? Their currency is not convertible, and many people had hoped that the sophisticated firms, the leading brand names in the West, would be able to inhabit the Chinese financial market, but they had opted to maintain that distance. But is Hong Kong going to be the sacrificial lamb of this dollar crisis? And will China then further decouple from the United States or from the dollar system?
If there's any silver lining to the amount of money printing that the Fed has been doing, the Chinese put us to shame, right? So is that what you're kind of getting at if we're talking about kind of fragility and these reverberations throughout the financial system, that you may not think it because they're the global production powerhouse of the world, but they've been printing probably 2 or 3x the amount of money that we have. And if this shock spreads into China, they basically need to decouple, right? Because they can then sustain the dream inside of their bubble, but they got to close the bubble some more or something to that effect. Is that kind of what you're getting at?
I'm going to recommend that people pay attention to two gentlemen that I've recently made podcasts with. The first is Stephen Roach, who used to run Morgan Stanley Asia. He's now at Yale University. And in particular, Jim Chanos, who was a famous short seller, a deep focus on China. And I know that Jim's work, he was one of the people who really illuminated the Enron scandal, the off-balance sheet things and so forth that we learned about there. He played an enormous role in that unmasking. But what people have said to me, like these two gentlemen, is that the Chinese dynamic started with export-led growth, was moving towards building their own tech sector, but the power, which you might call the thrust of recent years, started out with infrastructure development, trains, highways, and so forth, and then moved to primarily residential, but also commercial real estate. And now that China, which you might call the real estate boom, is decelerating, they have what you might call growth challenges as well. And whether foreign, which you might call cutoff, and having China be, I won't say a closed economy, that's not right, but having it being segmented, particularly in the financial sector, in this next phase, may mean that if they had a slowdown and they had a real estate crisis, an awful lot of the Chinese population would be, how would I say, subject to those losses, either as owners of real estate or as people seeking employment in a stagnant economy. So I think there are a lot of challenges in China as well.